Hello and welcome back to the SME Corporate Governance Bootcamp. And today is the fifth in our series of video blogs, and we're tackling the whole area of improving risk management in your business. Now, every business activity carries a certain amount of risk, and it's also a question of the level of risk that any business owner wishes to accept. However, the key point is that you have an opportunity to manage your business risks. And today we're going to run through some ideas to help you to put in place good governance steps to manage the risks in your business. Now, as before, just some rules of the game as we're talking through these video blogs. They are primarily intended for small and medium enterprises. Typical companies will have 5 or more employees. I want to stress once more that this is not about a compliance focus towards governance. This is about practical steps that you can take to improve and protect your business and increases your chances of success as you define it in your vision. One of the big things that you can do easily is to think and act big, just like large corporations. And if you adopt that mindset, that's going to free up your thinking and to allow you to borrow and to learn from the key things that these large organizations do. We all know that for an SME owner, the whole issue of running the business and the success of the business is personal. And that's why all of these topics that I'm covering is so important to all of us as individuals running small and medium companies. I'll be talking about governance riffs, and this is a music analogy which is just repeating and restating some of the key concepts and key ideas throughout the series of the video blogs so that they become embedded in the language that you use and in the thinking, and I hope that they will become important to help you improve the success of your business. It's very important as a starting point that there's an honest recognition that every business can be improved. No matter how good it is, there are areas that you can look at and focus on. And during this time, I hope you'll have an opportunity to take some of the practical tips from the governance blogs and that you'll be able to apply them successfully to your business. And lastly, to say that we're not about fancy presentations or fancy slides. This is just getting to the point quickly and giving practical tips that I hope will be of use to you. So firstly, let's just look at the rationale around the whole area of risk management, or to give it its wider and correct management title, Enterprise Risk Management, ERM. This is normally a topic that is associated with large companies where, because of compliance and regulatory requirements, they have to address risk and they have to put in place steps to manage their risks. But the whole area of risk management is something that is less common in small and medium companies. And it's my argument that if you do place emphasis on this, you're going to put in place really good governance structures and practices that are going to help you protect their business. And in the world around us, with a much complicated business environment and things changing all the time, it's really now a situation where effective risk management is essential, not just a desirable thing or an optional luxury. Now, what risk management is all about is looking at the risks and defining a level of accountability in the organization, in the leadership team to manage those risks, discussing and identifying those risks and making them visible to the organization so that they're raised up to the appropriate level of decision making and key steps are taken to address those risks. And lastly, if you get to a situation where you're managing those risks as effectively as you can, it's going to give you enormous peace of mind relative to a reactive stance where risks are managed when the fires burn and you have not thought through and you're reacting much quickly than you really want to. So peace of mind comes from a proactive approach for risk management, and I hope that the following ideas will give you some strong tips to help you get to that level of peace of mind. So when you're looking at reflecting on the whole area of risk management in your organization, I just use this ABC methodology. A is to look at the internal risks in the organization, to raise awareness and to define mitigation. B is around the external risks that there are in the organization, and again, raising awareness of those and around mitigation. And then C is around the whole area of mitigation. And you can reflect just on some basic questions that will tell you where you are in terms of managing the risk in your business. So firstly, do you have in place a defined set of policies and documents in respect of risk and risk management in your organization? In other words, have you documented your approach to risk management? If you have, that's fantastic, that's a great start, but probably, like most, you won't have done that. Do you have a register of risks in the business? Have you prioritized those risks in terms of the impact on the business and their urgency? And have you brought them together in a document essentially called the risk register? And I'll talk about that a little later. Do you have in place specific strategies, specific plans with clear accountability to manage the key risks in your business? And do you regularly review the process? And as I've mentioned before, in terms of board meetings and in terms of the vision statement and so on, there must be a proactive, regular review of the business risks at board level, and to make sure that the plans in place and the action strategies are being executed as required. Do you have sufficient insurance cover to cover all the risks in the business? It's an obvious one, but it's now a time just to reflect on that and to look at the key insurances, the policies that you have in place, and to make sure they are fit for purpose. And lastly, is the management team focused and aware of the key risks in the business? And is there clear accountability to manage those risks in the business? Now, that's just a checklist of some basic questions that you can ask yourself at a high level in the business, and it will also give you a clue as to where you need to start and the areas that you need to prioritize. Now, there's a whole host of areas where you can focus, and as you're looking at the level of risks in the business, the types of risks in your business. And as I say, I'm going to go back to this ABC methodology, and I'm going to talk about external and internal risks that you can assess and that you can focus on as a checklist, and that's going to help you move towards the next step of managing your risks on a proactive basis. So let's look firstly at the internal risks, and in no particular order, but these are a suggested checklist of some of the internal risks that you might need to assess in your business. Looking at intellectual property. Is the intellectual property, be that trademarks or brands and so on, is that intellectual property properly protected in the business? Have you legally registered it? Is it safely stored? Are there any other risks connected with that intellectual property that you need to identify? Finance management. This is such a broad area, but you can quickly establish where are the key risks in respect of managing the finances in the business. Is there sufficient control on the bank account? Is there sufficient quality of the flow of information and the reports that are produced every month? Do you have the right skill set in the business to manage the business? Do you have the right indicators to let you know if the financial parameters are properly executed? Is there a risk of fraud or theft and so on and so forth? It's a huge area, and you can quickly identify where are the weaknesses in the business in respect of risk and then try to prioritize them, and I'll come back to that in a minute. As regards information technology, there's a whole host of risks here. Firstly, there's a whole list of issues around compliance and the storage of personal data and so on, and that will vary from jurisdiction to jurisdiction. But data protection of customer bases and so on is a key area, and you need to understand your risks on that side. Also, a lot of businesses will have a dependency on information technology for their customer contacts, for their supplier contacts, etc., etc. What happens if those IT systems fail? How regularly are they backed up? How modern are they? How fit for purpose are they? And so on. Do people in the business understand them, and do you have the right level of skills in the organization to properly manage and control your information technology? So that whole area is an area that you can look at and assess the risks. A key other area is the whole area of key employees in the business. How dependent are you on certain key employees, and what would happen if they fell ill, if they left the business, if they're due for retirement, if they stole, if there was fraud, etc., etc. How well are you engaging and managing the relationships with your key employees to motivate them, to retain them, especially during these challenging times? So you can look at the key employees that you have in your business, be it in supply chain, be it in sales and marketing, be it in manufacturing, wherever it is, identify those key employees and understand the risks that you have with each of them and how you can proceed to address those risks. Ownership of the business is another key area. What happens if there's a change of ownership in the business? What happens if the owners become ill? Are there systems in place to take over from them to manage the interim until there are replacement arrangements? Are there risks associated with bringing in new owners, new family members into the business, whatever the situation may present itself? So try and do a deep dive on the whole area of ownership of the business and understand the risks that are there that you need to identify. And lastly, in terms of governance, does the board actively take part in the business? Are there good systems of governance in the business? And of course, that's the whole topic of the video blogs that we're doing. So look at your governance structures and understand where the risks are. Are there effective delegations of authority? Are there any other risks that you want to identify in respect of how the business operates? So they are just some examples, and there will be others that you can look at in terms of the internal risks. And now I'll move on to external risks. And again, this is just a snapshot, a suggested number of areas that you can look at. What about key customers? Are you dependent as a business on 2 or 3 key customers? And what would happen if they moved to a competitor, or they had problems with paying their bills, or whatever it is? Look at your dependency on the key customers in your customer base and understand the risks that are there. You can also, connected to customers, look at your brand and look at how well your brand is controlled and policed in the public domain. Do you have any issues that you need to trademark? Do you have any issues that you need to address in respect of your brand? Any weaknesses that are there? Look at those risks and start to draft them out. Again, another key area is the whole area of suppliers. Do you have a critical dependency on a small number of suppliers? And what would happen if they stopped supplying you? What would happen if they increased their prices? What would happen if they had problems in terms of their supply chain? So look at your critical suppliers and identify the risks that are there for your business. Competition. Every business faces competition, and you may be concerned about the threat of new entrants into your area of activity. You may be looking at some key competition moves. For example, if they increase prices or change their payment terms or change their competitive terms, what would happen to your business? How would you react? How would it impact you in your business? You can also look at the office premises that you have or where you are located and look at that from a risk point of view. Are there safety risks in the office or the manufacturing location? Are there risks in terms of renewing the lease? Are there risks in terms of logistics? are there risks in terms of your key employees and your employment base being able to reach that office or location? A whole host of areas. Is the office big enough to justify your current level of activity or your future level of activity? Do you need to look at new locations, etc., etc.? Another key area is the whole area of the business environment. Obviously, the whole area of unplanned natural threats, such as we have a COVID-19, that is a threat in the business environment, but there's not much we can do about that, but it is still nonetheless a risk. There may be changes in the legal situation in how businesses are regulated in your business areas. There may be changes in the environmental aspects of how businesses are expected to comply with new regulations, etc., etc. There may be changes to the types of fuels that are connected to your business. Whatever it is, look at the broad business environment and try and understand what are the next forthcoming risks, the current risks that are going to happen over the next 3 to 5 years, and think about those as to how they will impact your business. And lastly is the whole area of legal. So you may have legal cases against you where you are going through the courts, etc. That may impact on your brand. It may take up management time. It may take up cost. There may be changes in the legal framework, the legal structures of your business. There may be changes in how your business activities are regulated by government, etc., etc. So look at the whole area of legal risks and think about the key risks that there are in your business. Now, that list of external and internal risks is just a shorthand, a starting point, and you will look at your own business, look at the key aspects of internal and external risks, identify those risks, and then you can move on to the next step in the process. Now, the next step in the process is this whole area of compiling a risk register for your business. Now, risk registers can be hugely complex documents or they can be relatively simple documents. But essentially, all a risk register is a formal definition of the key risks that there are in your business, to identify the impact of those risks on your business, to identify a strategy and an action plan to mitigate those risks, and to make sure that there is a cost and an accountable person associated to manage that risk. And it is a place where the board and the owners can in one place look across the business at all the risks that are there and understand how well the company is developing its attack and its approach to manage all the risks proactively. So there's a very simple process that you can go through as a starting point for developing your risk register. And obviously over time, this is becoming more sophisticated as your business grows, as you spend more time refining how well you become proactive at this. And obviously it's a starting point that is going to improve and improve the more that you do it. So my suggestion is to develop a format, a very simple format for your risk register, be it in a spreadsheet or a Word document or whatever it is, and simply take an individual heading and look at that across a number of criteria. So you may take, for example, a heading and category of suppliers, and you may identify a risk there that you have an overdependence on one key supplier which affects 60% of your production. If that supplier stops supplying you, assess the impact and assess the urgency that you would have to fix that. Then move to the next column and think about what are the strategies, what are the actions that you can take over a period of time in order to mitigate that risk, and put in place key implementation milestones to know that you're on track to effectively execute that mitigation strategy. The next column is all about the cost of that risk mitigation, how much it's going to cost you, what sort of resources you're going to have to throw at it, and then you'll have an idea of how critical that risk is to your organization overall. The next column is what I call the owner, and this is simply saying who in the organization, in the leadership team, is going to have specific accountability for that risk, and who is going to be accountable to make sure the mitigation strategy is executed properly. And the last column, I say when, and that is simply a timeline to define at what point will that action be concluded. It might be 3 months, it might be 6 months, it might be a year. But typically what you're going to do is you're going to complete this format for each of the major headings and categories, and you're going to identify 2 to 3 risks at least in each category and complete this format for them. And then what you'll understand is you'll understand which are the critical ones, because I would ask you then to rank them. If you end up with 20 or 30 risks, rank them in terms of their impact of the business and in terms of how urgent they are to be addressed, and perhaps in terms of the costs that are involved in order to mitigate those risks. So when you rank them, then you'll be able to prioritize them in the table, and then very quickly you and the management and the ownership will be able to see where are the key risks in this business, what we're doing about them, how much it's going to cost, and who is accountable to make sure that this is done on time and in budget. So populating the risk register is an extremely powerful exercise, and I recommend it's done between the owners, the board, and the leadership team, however you wish to manage that process, so that it's an inclusive, integrated process where you have the right level of expertise and the right perspectives in order to properly identify and codify those risks. And then once you've completed that document, that essentially becomes your risk register, and it's a live document. And that document is reviewed at every board meeting, and they will assess how well the organization and the leadership team is proceeding in order to address and manage the risks. And then at least once a year, or perhaps more often depending on how frequently your business environment changes or there's a significant change towards risk, that document should be updated at least annually in accordance with the business cycle to make sure that it's up to date and relevant and related to the key success of your business. So I assure you, if you go through this process of taking a proactive look at the risk in your business, populating this risk register, it's an extremely powerful exercise to get everybody in the organization aligned, to understand where the key risks are in your business, and to understand the steps and the cost it's going to involve to address those risks on a proactive basis. So to wrap up, I hope that's been useful, and it is highly recommended that you take a proactive step to manage the business risks that you have in your business from the board downwards. And quite simply, go through a simple process as a starting point to develop a risk register and monitor the risk register and make sure the actions are properly taken and properly executed. And if you do those 2 things, you're going to have enormous peace of mind. You're going to galvanize the organization towards managing risk, and you're going to put in place really good governance towards the success of your business. So I hope that's been useful. And as always, I'd ask you to give any comments or to connect with me through the email address there and Twitter. And our next topic we'll be talking around is the whole area of reducing complexity in your business. And I look forward to doing that with you very soon. Thanks very much. Hello and welcome back to